The 2019 filing season is upon us. Before the IRS begins accepting returns on January 27, 2020, we wanted to take this opportunity to share with you some changes that were made to the Form 1040 since last year. Standard deductions for all filers have increased. Single or married filing separately filers are now taking a standard deduction of $12,200. The deduction for married filing joint is double that at $24,400. If you file head of household, your standard deduction for the 2019 tax filing year will be $18,350. There are additional increases for taxpayers that are age 65 or older or legally blind. The new Form 1040-SR is a simplified tax form for seniors who have uncomplicated finances. Form 1040-SR allows an individual to report income from wages, salaries, tips, and other income sources such as taxable interest, ordinary dividends, IAR distributions, pensions and annuities, Social Security benefits without a limit on total income for the tax year. Seniors who fill out Form 1040-SR must take the standard deduction. Included on page 1 of the form is a chart that spells out standard deduction amounts based on filing status. Other senior-friendly features include larger font and spaces to fill in information.
For IRA and pension reporting, last year IRA distributions and pensions and annuities were combined on one line. This year, new for 2019, they'll now be reported on two separate lines. For capital gains and losses, last year they were reported on Schedule 1. For 2019, capital gains and losses will be moved to page 1 of the 1040, specifically on line 6.
So now we're going to talk about the tax forms, the schedules. This year there are fewer schedules for 2019. Last year there was Schedule 1, which included the income and adjustments to income. That really hasn't changed too much in 2019. For taxes, Schedules 2 and 4 from 2018 are now combined into one Schedule 2 this year for 2019. For credits and payments, Schedules 3 and 5 from 2018 are now combined into Schedule 3 for 2019. Last year's Schedule number 6 has gone away for the third-party designee. That is now included on page 1 of the 1040.
For 2019, taxpayers are going to have to now answer a question if they at any time during 2019 received, sold, sent, exchanged, or otherwise acquired any financial interest in virtual currency. So the IRS is using this new question to increase tax compliance regarding cryptocurrency. So if you engaged in any transactions in cryptocurrencies like Bitcoin, Litecoin, and the other approximately 3,000 cryptocurrencies, this question serves as a reminder that you're going to need to report those taxable transactions and gather all the tax information regarding it.
For 2019, you no longer need to make a shared responsibility payment or file Form 8965 if you don't have minimum essential health care coverage for part or all of 2019. The other change is the checkbox for the health care coverage question on the 1040 has been removed.
There are two new forms that may be included with your tax return this year. The first we're going to go over is Form 8995, Qualified Business Income Deduction, Simplified Computation. The Qualified Business Income Deduction, commonly referred to as QBI, is a deduction established for self-employed and small business owners as part of the Tax Cuts and Jobs Act. While this deduction was available on the 2018 returns, there was no formal schedule for the calculation of this deduction. The second form that may be included in your return is Form 8997, Initial and Annual Statement of Qualified Opportunity Fund Investments. Congress has identified a number of economically distressed communities throughout the U.S. As a way to spur economic development and job creation within these specified communities, taxpayers can invest in approved partnerships or corporations within the specified area and receive preferential tax treatment.
The team here at VNFA hopes that you find this information useful. We look forward to working with you and helping to prepare your 2019 tax return.